Good morning, everyone. Good morning, students. I am Ankit Sharma, your income tax faculty. Again, we are in our session 2 for income from house property. I believe that you all are studying very hard to achieve the goal of your life. That is to be a chartered accountant as soon as possible. So, festival has gone, of course, and even I am suffering from some cold and, of course, the a little bit tired also due to the festival occasions. So again, good morning, Suprabhat, Namaskar, Kem Cho, Vadakkam, Subha Vakher, Sasri Akal to everyone. And good morning wishes from Ramadevi, Ajay, Gaurav, Parth, Lavanya. Okay, Lavanya has given me the answer of the question I asked in the last session. I asked a question from the notes regarding the calculation of pre-construction period interest and current year interest, like a homework for all of you. So Mrs. Lavanya has given me the answer. I do not know it's correct or not, but I am waiting for the more answers, of course. So if you have solved that question, kindly send me the answer. So the answer will be like six answers because there were three cases, A, B, and C. And each cases have two answers regarding current year interest and 1/5 of pre-construction period interest. So kindly send me the answer. So good morning to everyone again. Ajay Chauhan, Priyanka, Sankaran, Shagufta, Mamta, Mukteshwari, Solanki, Saipya, Mohammed, etc. Rahul, Hardik, Monica, Himanshu, Ashutosh, Zafar, Naresh, Mr. B. Livingstone, okay, from England, okay, Sakshi Jadhav, Mr. Ghosh, Suman Goyal. So, after your good morning wishes, kindly send me the answer of the question I have asked you in the last session, which was this. We were discussing the concept of interest, that was current year interest and pre-construction period interest. And this example I have asked in the last session and I expected answer of this question. So kindly send me the answer. After the lecture, after a 30 or 40-minute lecture, I will discuss the solution of this question. Till that, you can send me your answers. Okay. So we were discussing the provision regarding different kind of numerical question which can be framed under income from house property. We have discussed case number A and B, and now we will move on to our case number C, and then case number D, E, F, and G. So we will complete our income from house property, all cases, all provision, and then we will move on to solve the questions from your study material as well as test your knowledge questions. Okay. So case number A, let me remind you once again, let me revise it for you. Before that, thought for the day, of course, and that is do or do not, there is no try. So if you are in this profession, if you are this in this journey to become a chartered accountant, either you have to do it or you don't do it. There is no try. So if you are committed to yourself that I will be a chartered accountant, so you have to do the sacrifices, the hard work, the studies, etc. So you will be a chartered accountant. So if there is any confusion in your mind, if you are in a dicey position that maybe I will do this course, maybe I won't be able to do this course, so please be determined that yes, you have to do, you have to be a chartered accountant. So if you will commit to yourself, if you will decide yourself, and if you are going to do hard work to become a chartered accountant, definitely you will be a CA and very soon. So just be confident, be focused that you have to be a chartered accountant. Now moving on to our notes. Case number A, I'm going to revise it for all of you. So case number A or B, they are just the same kind of solution. So case A and B talks about if the assessee has two properties only, and they both have self-occupied or vacant, or one self-occupied or vacant. So in this case, annual value will be automatically nil. 30% of annual value as standard deduction will already nil. There can be only one deduction regarding interest. And this interest will be current year interest or 1/5 of pre-construction period interest. Remember, this can be available only if assessee opt to shift out of the default tax regime. So in this scenario, if you opt out from 115 BAC, so under only optional tax regime, this benefit is available. So this interest deduction can be maximum 30,000 or 2 lakh rupees in aggregate for both houses. It is not individually 30,000 or 2 lakh. No, it's in aggregate 30,000 or 2 lakh rupees. Clear? When it will be 2 lakh rupees, there are two conditions you have to fulfill. First, loan must be taken on or after 1st April 1999. And the second condition was the construction of house for which loan has been taken must have been completed within 5 years from the end of financial year loan taken. Clear? So what is pre-construction period? What is current year interest? We have already discussed it. So that was case number A or B. Now we are moving on to case number C. So case C, when there are multiple houses used for multiple purposes, then case C is a selection case. It does not have any solution criteria. It will tell you which case or which house will be solved by which means. So what I'm trying to explain you is this, that case number C will be applied when you have multiple houses. Like suppose if there is an assessee having 3, 4, 5, 6, 7, suppose, fine. So this house is self-occupied. This house is self-occupied, suppose. This is also self-occupied. This is also self-occupied. So out of these 7 houses, 4 are self-occupied. This is let out to someone for his residential purpose. This is let out to someone for his business purpose. But they both are let out. Clear? This has been used as his business purpose for assessee business purpose as an office we assume. Fine. One more house, suppose this is 7 months let out and 5 months self-occupied. So there can be multiple cases. If you have more than 2 properties and those are self-occupied, etc., or if you have 2 properties, one is self-occupied, one is let out, etc., then case C will tell you by which way you are going to solve these. So if properties are self-occupied, then all the properties, those are self-occupied. Out of these 4 properties, any 2 will be solved as per case number A or B, like this. Any 2. Out of these 4, which 2 we will solve as per case or B? There is a separate kind of solution for that. We will discuss it. But for time being, you should understand what case C will tell. C will say out of these 4, 2 will be solved as per case number A or B, and remaining 2 will be called deemed let out, which will be solved as per case number D, which we are going to discuss after case number C. So out of these 4, C will tell 2 will be solved as per case number A or B, and balance 2 will be called deemed let out, and they will be solved as case number D. The actual let out properties will also going to be solved as per case number D. Which property, those property which has been used for his own business purpose, will not be fall under income from house property. That is going to be treated under PGBP head, not under income from house property. This property also, if any property which has been let out for part of the year and self-occupied for the part of the year, that is going to be solved as per case number G. There are case number F and E also, which might be included under case number D, etc. But I'm just trying to explain you this, that case number C does not have any solution procedure as case number A or B. So it's just a selection procedure case. So if you have multiple situations If you have multiple houses, if you have multiple situation, then case C will tell you that which house is going to be solved by which case. So all the self-occupied properties or vacant, out of these only two will be solved by case A or B. Balance all will be called deemed let out and will be solved as per case D. All actual let out properties like this and like this, they are going to be solved as per case number either D, E, or F. What is D, E, F? We will discuss. If any property is being used for his own business or profession, that is going to be the part of PGBP head, not income from house property. And if any house which is let out for part of the year and self-occupied for the part of the year, that is going to be discussed as per case number G. So we have discussed case number A, B, and C. Now the main cases are D, E, F, and G. You can see that in these cases, there is a problem. The problem is, just a second. The problem is that the format of house property says, first of all, we have to calculate the GAV. Then out of that GAV, we have to deduct the municipal taxes which is paid by the owner. Then we will have our annual value. But in case number A and B, we just directly find or calculate the annual value as nil. From case number D, now we will see how to calculate case number GAV in our cases. So case D says if there is a house property, which is let out for 12 months, that means for full year, and full 12 months rent also received. So if this kind of question has been framed like this, that Mr. A is having a house property, he has let out that property to Mr. B for whole year, and the rent for the full year has been received. So if this kind of question has been framed in the examination, then the solution will be as per case number D. So all actual let out property for 12 months, for which 12 month rent received will fall under case number D, as well as all deemed let out properties. All deemed let out property will also fall under case number D. So for actual let out, only those property will fall for those rent has been received and let out for full year. And for all deemed let out property, automatically always case number D will be applicable. Now in case number D, we have to find out the GAV first, that is gross annual value. How we are going to find the gross annual value? The point number 1, or we can say step 1 says, in the question there will be given municipal value. In short, we are saying it MV, that is municipal value of that property. So that means as per municipal rules, what is going to be the rental value of that property for the whole year is called the municipal value. So municipal value will be given in question. You should take that value. And then one more value will be given in question, that is called FR, that is fair rent. That is market rent, we can say. For that property, what is the market rental value? That is called fair rent. So these both value will be given in question. So you just need to follow the step, take the municipal value, take the fair rent, and whichever is higher, that is not going to be our GAV. As per Rent Control Act, there are rental value which is called standard rent. That will also be given in question. We need not to calculate municipal value, standard rent, fair rent. These will be given in question. But we need to know the step we have to follow. So that higher value from step 1 need to be compared with the standard rent value. Out of these two, whichever is lower, that is not going to be the GAV yet. So this lower value will take, and now step number 3 will come. Step 3 says there will be one more value which is called ARR, actual rent received, the real value for which the property has been let out. So if the property is deemed let out, there will be no actual rent received, because in case of deemed let out, we assume that if property would have been let out, what is the rental value? So because the really in real, this property has not been let out, that's why it's called deemed let out. So in case of deemed let out, this lower value will be the GAV automatically. But in case of actual let out, there will be actual rent received. This value also be given in question. Now we have to compare these two values, and which is higher will be our GAV. So technically we can say in case of deemed let out, there will be only step 1 and step 2, and with the lower value from step 2 will be our GAV. But if the property is actually let out for 12 months and the rent has been received, in that case, step number 3 will also be applicable, and the higher of these lower value and the actual rent received will be my gross annual value. Once you will find the gross annual value, the solution is very simple as per the format. Now we just need to deduct municipal taxes, which is paid by owner. Okay, which is paid by owner. We need to deduct it. That will be my annual value. After annual value, of course, we have only two deductions. First is standard deduction, 30% of annual value. Need to deduct that. And second is, of course, current year interest, and 1/5 of pre-construction period interest. The good news is, in the case of current year interest and PPI, there is no limit. That means as per case number A or B, there was a limit of 30,000 or 2 lakh rupees. But in case of property case D, E, F, and G, all other cases, whatever interest will be calculated as per current year interest or 1/5 of PPI, you can deduct any amount of interest. Even it's 50,000, even if it's 2 lakh, even if it's 3 lakh, even if it's 5 lakh, even if it's 10 lakh. So there is no restriction in case number D, E, F, and G in respect of current year and 1/5 of pre-construction period interest. So that was case number D. There is only just one thing extra we need to calculate in case of D, that is called GAV. So GAV is municipal value fair rent, whichever is higher. Higher is need to be compared with standard rent, whichever is lower. That lower will be automatically your GAV in case of deemed let out, because you would not have any ARR. But you have actual let out, you have to compare that lower value to ARR, and the higher will be your GAV. After GAV, need to deduct the municipal taxes, deductions, and interest with any limit under both regime. Only in case number A and B, there is a restriction that interest can be claimed only under optional tax regime. But in case number D, E, F, G, interest is allowed to any limit and under both regime. There is no restriction that it can be allowed only under default tax regime or optional tax regime. It is allowed under both regime. I hope it's clear. Okay, now that was case number D. Moving on to our case number E. Now case E, almost similar to case number D, but there's only one difference. Suppose there is a property which is let out for 12 months. Clear? Just like case number D. But there is one difference. The difference is full 12 months rent not received. That means there is some unrealized rent. That means there are some bad debts. We all know the meaning of bad debts, of course. Under accounting, we have heard this word that if you sell your goods on credit base, then there are debtors. And if out of that debtor, if there are some debtor who are not paying your amount back, that means your bad debt. So technically, exactly, in case of house property, the if the tenant is not going to pay you the full year rent, he is paying you 11 months rent or 10 months rent or 9 or 8, so he is not going to pay you full 12 months rent, then the amount of rent which is not recoverable, that is called unrealized rent. As the name suggests, unrealized, the rent you did not able to realize, you did not able to recover, that is called unrealized rent. So if the question says that the property is let out for 12 months, but the rent received only for 10 months or 11 or 9 or 8 or 7, that is my case number E. So what is the difference between case number D and E? The D says full 12-month let out, full 12-month rent received. E says full 12-month let out, but there is some unrealized rent. That means full 12-month rent does not receive. There is some bad debts in rent. So the solution is exactly the same. There is no difference. Automatically, suppose municipal value of the house is given 2 lakh rupees. Fair rent of the house has been given in question 2,20,000. Standard rent in question is given 2,10,000. Actual rent of the house was 20,000 per month, out of which, suppose question says 3 months rent did not receive. 3-month rent was, suppose, unrealized rent. So how we will solve? We need to find the GAV. Step 1 says municipal value, fair rent, whichever is higher. So 2 lakh or 220. In comparison to salary, this is a very, very easy topic, very easy chapter. So higher will be 2,20,000. Now standard rent, we have to compare it with standard. Step number 2. So 220 or 210, whichever is lower. That means 2,10,000 is my lower value. Now I need to compare it again, the same formula, ARR, exactly same formula. ARR stands for actual rent received. Clear? Actual rent received. So if I'll ask you that if the let out per month rent was 20,000 rupees per month, and there is 3 months unrealized rent. So technically property has been rent received for that property is for 9 months. That means ARR will be 1,80,000. The word suggests actual rent received. So how much rent has been received? That is for 1,80,000 only. So whichever is higher in this question, GAV will be 2,10,000. Once you get the GAV, the question is technically solved. There is nothing much to do because municipal tax will be given in question. Need to deduct it. 30% deduction fixed and then interest provision. That's it. Suppose question says that is only 1 month unrealized rent. In the above question, it says only 1 month unrealized rent. That means we have received 11 months rent. So in that case, lower value as above will come 210. Only ARR will change. Now ARR will be 2,20,000 for 11 months. So higher value will be 2,20,000. That will be my GAV. So technically you can see there is no difference in case number D and E. Same format. Automatically your ARR will be changed. The ARR in case number D will be for 12 months. ARR in case number E will be for the months we have received the rent. As I told you, you need not to mention any case D, E, F or G name in the solution. I'm just trying to explain you that if there is a question in which unrealized rent comes, then you have to understand that I just need to take those months rents which has been received. Clear? Again, because you did not receive 3 months rent like a bad debts. So department will not assume that if you are saying that you are only received 9 months rent, so I will assume that, okay, you are saying the truth. You might receive this 3 months rent in cash and 9 months rent via check. And you might to avoid just tax. You are saying to government that sorry, I was not able to recover this 3 months rent to just lower your tax liability. So it might be that landlord may do this. They can take some month's rent in cash and balance in check, and this rent can be claimed as unrealized rent to lower their tax liability. So department has suggested no, we will not assume just by saying that you have some unrealized rent. There are certain conditions you have to prove to the department. You have to prove to the department that yes, I took all legal steps to recover this rent of 3 months, but I was not able to recover. You have to prove to the department that I have asked, I have sub notice to that assessee, I have filed a case against him, etc. The specified conditions are there. You have to fulfill that. If you are able to fulfill that, only in that case, this unrealized rent will be assumed as unrealized rent. Suppose in question, it says that assessee was not able to prove that this 3 months unrealized rent was there. So in that scenario, the question will be solved as per case number D. Full 12-month rent will be taken as actual rent received. That was case number E. Now we are moving on to case number G. First, we will solve case number G and then we will solve case number F. So do not think that I skipped that case number F. We will discuss the case number F in the last case, as the last case, because it is, from my point of view, it's the most important case, and it's different from case number D, E, and G. Case number D, E, and G have same sort of solution. There is no difference. So case number G says it will be applicable if there is a property which is let out for part of the year. Read carefully, part of the year, not part of the house. And self-occupied for part of the year. Clear? For example, it's let out for 8 months and self-occupied for 4 months. There is no vacancy. So if any property is let out for part of the year or self-occupied for the part of the year, how we will solve it? Same provision. There is no difference. GAV, same municipal value, fair rent, whichever is higher. This higher, standard rent, whichever is lower. This lower, with actual rent received. Automatically, in the above question, the actual rent received will be for only 8 months. So that 8 months rent, we will write it down. We will compare it. Higher will be your GAV. Suppose in this question it says 1 month rent is unrealized. Then we will take 7 months rent. Again, same solution. So case D, E, and G does not have any difference in the solution pattern. We need to take the municipal value for full year, fair rent, standard rent. Just the ARR value will be changed accordingly. In case of D, full ARR value, and in case of E and G, the 12 months ARR value will not be there. There will be some less than 12 months value. Suppose the question is this, that there is a house having 2 floors. One is self-occupied, one is let out. This is for 12 months let out, this is for 12 months self-occupied. Now this case is not F case. We are not discussing F case right now. This is called part of the house let out and part of the house self-occupied. Do not compare this case as per case G, because in case of G, either the house was let out or it was self-occupied. There was not part of the house is let out or self-occupied. There was part of the year it was either let out or self-occupied. That means either tenant was there or either we were there. But in this case, we both are there. 12 months a floor is let out, 12 months a floor is self-occupied. In this case, how is going to be solved? So this is going to be solved as per case number A. Self-occupied, annual value is nil, etc. Simple. Up to 30,000 and 2 lakh rupees interest. This is going to be solved, depends. If full 12 months rent received as per case number D. If unrealized rent, then as per case number E. So that will again, the solution will remain the same, ARR, etc. Now the last case is case number F. We will discuss the examples of each cases after we will discuss case number F. Clear? Case number F is a different kind of case. You have to give more attention to this case. If I am an examiner, I am going to frame always case number F question in the questions, in the examination, of course. Because you can see under house properties, total 7 cases. 7 kind of question can be framed. Case number A or B. They say annual value nil. You just need to deduct the interest, whether it will be 30,000 or 2 lakh rupees. Clear? It's simple. Case number C is a selection case. It says if you have multiple houses, then I will tell you which house is going to be solved by which case. Okay. Case number D, E and G. They both have same solution process. There is no difference. If property is let out for full year, rent received for full year, just ARR is going to be changed, and that is automatically going to be changed because the name is actual rent received. So for case number D, E and G, whatever actual rent received by you will be put into the place of ARR. All other points, above point will remain the same. The higher will be in the last step 3 will be your GAP. But the case number F has something new, something different in comparison to all other cases. So please give your attention to case number F. Case F says, if any house is let out and vacant, let out and vacant in previous year. Now this is a case which we did not discuss in any other case. They all are mutually exclusive case. A, B, C, D, E, F, all G. They are all mutually exclusive cases. So you can see in case number A or B, we will take the self-occupied property or we will take the full year vacant property. There cannot be let out. Case number D, property is let out for full 12 months. There is no vacancy. Case number E, full 12 months let out, but rent did not receive for some month. Again, property does not vacant, was not vacant. Case number G, either we were in the property or the tenant was in the property. Part of the year let out, part of the year self-occupied. That means it was never vacant. So you can see that in the all other cases, this is mutually exclusive. All cases are different. So it says if there is property let out and vacant, if these two conditions has been fulfilled, then case F will apply. It is possible that in this scenario, there can be unrealized rent also. That property is let out for 7 months and vacant for 5 months. Out of those 7 months, there may be 1 month unrealized rent. But remember, even if there is unrealized rent, you are not going to solve this question as per case number E, because the vacancy is the exclusive case in case number F. So if there is let out and vacancy, this two condition has been satisfied, then all other cases will be overruled. Question will be solved as per case number F. For example, I can say you, suppose a property was 8 months let out, out of which 1 month unrealized rent. Clear? 3 months vacant and 1 month self-occupied. So you can see that there is unrealized rent, which say case number E can be applicable. There is let out and self-occupied. It can say case number G can be applicable. But if let out and vacancy comes together, then all other cases are irrelevant. The solution will be as per case number F. Yes, case number F will consider the unrealized rent, the self-occupied thing, but the solution will not be as per case number G or E. The solution will be as per case number F. So please remember this very carefully. If there is let out and vacancy, all cases will be overruled by case number F. Now, how we are going to solve case number F? What is the new thing? Why I was saying that it is most important case? Why I am saying that you have to listen carefully when we are solving case number F? There is some reason behind it. So what is the reason? You will feel the reason in the solution process. So again, we have to find the GAV as all cases. Now the calculation of GAV is different. Step 1. Step 1 is same as per case number D or other cases. It says municipal value or fair rent, whichever is higher. There is no difference in step number 1. So might be difference in step number 2. Step 2, again same. It says higher or standard rent, whichever is lower. Now step number 3 has been changed. Step number 3 has something new. What is step number 3 in case F? Step 3 says the lower value which comes from above, and now you have to compare it in case number D, case number E, and case number G. We compared this value to ARR. And what is the full form of ARR? Actual rent received. But now in this scenario, in step number 3, this ARR is going to be replaced by a new word that is called annual rent. In short, we can say AR. So I guess you can find the difference in between these two words. ARR is actual rent received. And what is the meaning of annual rent? Annual rent means whatever will be the 12 months rent, that is called annual rent. How much received, it does not matter. So we did not going to compare this lower value with ARR. We have to compare it with a new value that is called AR, that is annual rent. So annual rent means you have to take the full 12 months rent always there. Whether receipt for 9 months or 6 months does not matter. You have to first take the full 12 months rental value over here. Clear? This value is not going to be compared with lower value. It will take time. Out of this 12-month AR, you have to deduct something. Then we need to going to compare it with the lower value. So what we are going to deduct, it says unrealized rent, if any. So out of this property, you can see in this example. In this example, suppose the rent was 10,000 per month. So AR will be technically 1,20,000. But it says if in the question, if there is any unrealized rent, you have to deduct it from annual rent. So in my question, if I'll write it down like this, 120 was my annual rent and there was 1 month unrealized rent. So I have to deduct out of this value 10,000 rupees. Clear? One more thing need to be deducted. Self-occupied rent. If this property has been self-occupied also. So technically, if it is self-occupied, then we are not going to receive any rent for the time period the property has been self-occupied by me. But for annual rent, we have taken the full year value. Out of this value, we are going to deduct that rent, which is not technically or actually received. So unrealized rent does not receive, we deduct the value. 1 month is self-occupied. So 1 month rent, because it is self-occupied, so there cannot be any income of it. So we have to deduct these two values if these are given in question. If that is not self-occupied, 8 month let out, 4 month vacant, then only unrealized rent will be deducted. If there is no unrealized rent, if 8 month let out, 8 month rent received, 4 month vacant. So we cannot deduct these things. But in the example, we are assuming that these given 1 month unrealized rent, 1 month self-occupied value need to deduct the both out of the AR. Now what has been left? That means 1 lakh rupees. So this 1 lakh is going to be compared with this lower value. Understand? But it's not over yet. It's left. There's something more. Picture abhi baki hai. So after deducting unrealized rent, if any, in the question, or self-occupied duration rent, if it is in question, whatever value we will arrive at, we need to compare it with the step 3 value, lower value, which has been arrived as above. Now, there will be two situations. If this value is higher, suppose this is 1,25,000. This lower value has been come above as above was 1,25,000. Suppose. So 125 and 1 lakh. Higher is 125. So if this value is higher, that case my GAV will be 1,25,000. There is no problem. There is no issue. Okay? But suppose it is not 1,25,000, it was 90,000. So if this is 90,000 and this is 1 lakh, then the higher value will be this value, which has been come via AR. That is 1 lakh. Now the twist came. If the lower value, that means standard rent value, is higher in comparison to this value, as in example when we have taken 125 and 1 lakh, then this is your GAV. Then you can solve the question further. Municipal taxes paid, all are safe provision, 30% deduction and interest with no limit under both regime. But if this is 90,000 and this value is higher, then we have to take this value outside. But in that case, this 1 lakh will not be GAV yet. Now we will deduct one more thing, that is called vacancy rent. You can see in this example, he received only 7-month rent, because out of 8-month rent, 1 was unrealized rent, 3-month vacancy, 1 month self-occupied. So out of 12 months, he just received 7-month rent. But in this 1 lakh, vacancy rent is still included. So if this value comes higher, if this value wins, then you are able to deduct the vacancy time duration rent also. So now your GAV will be 70,000. This vacancy rent deduction is not available if this value is higher. The standard rent value is higher. In that case, you cannot deduct this vacancy rent benefit. But if this value comes higher, in that situation, you can deduct the vacancy rent out of it, and that will be your GAV. So technically, you can see that if this value wins, then this will become your automatically AR. This is the actual rent receipt, but you cannot take this 70,000 over here, because in that scenario, if you deduct the vacancy here, then this value will be higher and GAV will change. So that is for your benefit, that if this value higher, then you can deduct the vacancy later. And for that, your GAV will be nil. If your GAV will be nil, your house property income will be lower. If your GAV will be lower, your tax liability will be lower. What if they both have same value? This is also a case. This is 1 lakh. We have taken, this is 125 or this is 90,000. Suppose this lower value is also 1 lakh. Now they both are equal. So if both are equal, then this value will be taken. So you can have the advantage of deducting the vacancy rent. So if this is higher or equal, if both values are equal, then this step will be followed. This will taken as your higher value. Need to deduct the vacancy rent and your tax liability will be lower. So in case of equality also, the benefit of vacancy rent will be available there. Only if this is higher than this value, you cannot deduct the vacancy rent. So that was case number F we were talking about. You can see it's quite, you can see complicated, you can see confusing, you can say, in my opinion, it's beautiful, because whatever is difficult, that is important and that is very, very beautiful. So in our life also, whatever is difficult, that is automatically important, or you can say whatever is important, automatically difficult in our life. So that is the example of case number F. It is difficult, that's why it's important in examination. Why it's important in examination? Because it is difficult in comparison to other. So CA is difficult in comparison to many courses like BCom, etc. That's why it's important. And why it's important? Because it is difficult in comparison to other courses. Okay. So that was case number F. Now we are going to read the cases and then we will move on to our queries and then we will start doing the questions. Fine. So that was case number A and B. We have discussed this provision in the last session, of course. Case number C is a multiple houses. It says if multiple house properties, some of which are let out, some are self-occupied, some used for own business, or there is multiple cases, then case C help in selection, not solution. So those are actual let out, will be solved as per case number D, E, F, G. Those are deemed let out, will directly go to case number D. Those are self-occupied or unoccupied, maximum 2 as per case A or B. Those are used for business profession of yourself, will be PGVP. Some floors are occupied and some are self-occupied. That will be as per case number A, B, C, D, E, F, G. Okay. So that was not a solution case. That was a selection case. It has been written in case number C. You can write. You can read it, of course. Now the case number D, that was tax treatment for the let out property or deemed let out property. Case number D say actual let out for 12 months and rent received for 12 months and all deemed let out cases. You can see the steps we have written over here also. GA will be step 1, higher of following: municipal value, fair rent, value is for step 1 or standard rent. One more thing, suppose in the question, standard rent is not given. It's not mandatory standard rent will be there. Suppose municipal value given 1 lakh, fair rent is 120. Standard rent is not given in question. Then this higher value 120. Because standard is not given, so that will be not applicable. So this value will be treated as lower value. That means 120. And we will compare it with the ARR. So if any value is not given, then we will take it as a not applicable. We will skip that value and solve the question. Suppose municipal value is also not given. Then again, the fair end will be the higher value. Standard is not given, that will be your lower value. Standard is given, suppose 130, then lower will be your value to compare it with the ARR. So if in a question, municipal value and standard rent is not given, then skip that process. Without that value, you need to solve the step and that will be your value, right? Okay. Now moving on to case number E. Case E says house property let out for 12 months, but unrealized rent was there. There is some bad debts. So tenant not paying rent. Same provision, ARR will be automatically changed. ARR will be after deducting the unrealized rent portion. The clarification I was talking about was here that you will be allowed this deduction. You will be allowed unrealized rent deduction if you satisfied these 3 conditions. You can read it, it is general conditions. Case number F, the case we have discussed at last, it says if house property let out and vacant, if these 2 conditions is fulfilled, all other cases are irrelevant. So if house property let out for part of the year and vacant also, if let out and vacant and self-occupied also, if let out, vacant, unrealized rent also, it does not matter. If these 2 things combined together, vacant and let out, case F will be applicable. Case F, condition 1, let out, the GAV, actual rent received or receivable. We have example also for this. Example, if I solve this example, municipal value, you can see, these all are case F. Okay? So municipal value is 90,000 and FR is 140. So whichever is higher is 140. Standard 120. So whichever is lower is 120. So lower value we have 120. Clear? Now we'll take annual rent first. So actual rent was 12,000 per month. So for full year it will be 1,44,000. There is no unrealized rent. There is no self-occupied. So we can compare it directly with this lower value. Higher will be 1,44,000. 3 months vacancy has been given in question. That means 36,000. So now your GAV will be 1,08,000. Clear? Suppose in our example, vacancy period is 1 month in place of 3. So I will deduct only 12,000 out of this 1,44,000. That will be 1,32,000. Third example says municipal value 2 lakh, fair rent 240, higher is 240. There is no standard rent has been given. So in the same case, because standard not given, so I will take this higher as also as a lower value. So my lower value is 2,40,000. Now the question says AR is 21,000 per month. So my annual rent will be 21,000 into 12. I guess 2,50,000, 52,000, I guess. Okay, yeah. So it will be 2,52,000. If there is any unrealized rent, tenant vacate the house property on 1st November and thereafter remain vacant. So vacancy is November, December, January, February, March. 5 months vacancy is there. Unrealized rent for the month of June and July. 2 months is unrealized rent. So we need to deduct the 2 months unrealized rent out of this 2,52,000. That will be 2,10,000. Now whichever is higher is this value higher. So because this value is higher, so we cannot deduct the vacancy time. This will be my GAV 2,40,000. Suppose in example 3 there is no unrealized rent. So lower value is 240. No unrealized rent. So technically we will compare it now with the full annual rent, that was 2,52,000. Higher will be 252. Now we can deduct the vacancy time duration value, which was 5 months. 1,05,000 we can deduct. Balance will be your GAV. Clear? Next is case number G, which says house property part of the year let out and part of the year self-occupied. These are different cases. We have discussed the. In case of G, there is again same provision. ARR will be for that part for which house property was let out. So now we will solve some question to make you understand the provision, what we have discussed till now. After that, we have some clarifications only there. But before that, we need to solve some question. You will be able to understand the provision with the numerical implication. That is question illustration number 1 on page number 3.140. Before that, let me take your queries first. Then we will move on to that. And I believe that you must have said your answer also for the question I have asked in the last session. Mr. Himanshu is asking, we have 5 major members in family. Can we hold 2 properties each? 5 into 2, 10 property for nil value of tax? Yes, you can do that. You have to registry. You have to make a register agreement. You should transfer those property via registered agreement in different persons of your family members. So if you are able to transfer registry in the name of those members separately, then you can able to take the value of whole 5 properties nil. Sorry, 10 properties nil, of course. Thought of the day has been done. Next is okay, Miss Monica send the answer. Current year in case number 1, the question I have asked. Case number A, current year is 1 lakh. Correct, Miss Monica. Pre-construction period 1/5 60,000. Very correct. Case number B, current year interest is 0. And pre-construction period interest is 46667. Well done, Monica. High five from Wi-Fi. And case number C answer you did not give in to me, Monica. Deepika. Yes, Deepika, you have asked me, can I get a solution for 25 number illustration of salary head? Because I was so occupied in this Diwali festival. Guest was coming, I was going somewhere, so I was not having much time to solve that question. But I promise you, on 21st of November, we have a class for PGBP. I will send the solution before that class. So sorry from my side because I was so occupied in the work and I'm also not well. Okay. Okay. Priyanka is asking, sir, is flat covered under house property? Yes, of course. The flat is also covered as a house property. So should I have to remember each point of every chapter or learn properly? Yes, we have to learn, but there's a lot of points which are very general points. You should focus on those points. Those are very, very important for your questions. Like we can say like question in this example, the case number D, E and G. These are very simple. If you understand the case number D, then E and G automatically solves. So you should not be focused much on those cases. But case number F has some different things. So you have to focus on case F. Because if you are able to solve case number F, I personally believe case number D, E, G, all are very simple to solve. Next is Priyanka Pandey is asking, sir, if Mr. Z having 4 houses in which he used 2 houses for business purpose and the rest 2 houses for residential self-occupied, what is the treatment of 2 houses used for business purpose? That will be under PGBP head as his asset. He can claim depreciation on it. That's it. There is no treatment in house property. And those houses you use for, those property you use for business or profession purpose, that will be treated as an asset in your business. And the business, what we do with asset, we claim the depreciation. That's it. There is no other treatment of income. Suman is asking, sir, if house loan taken and house given on rent, if house property is lost, then can it be adjusted against other income head? Yes, we can adjust it, but there is a chapter regarding it. Set off and carry forward of losses from one head to another head. In that chapter, you will be able to understand how we can set off the losses. For the time being, I can tell you, maximum 2 lakh rupees house property losses can be adjusted against other head of income, but detail will be in other chapters, so you need not to worry. You need to worry only income from house properties for the thing that you should understand how to calculate income from house property or loss. That's it. The adjustment part will be in some other chapter. What is municipal cost? Municipal value, the value for any property which has been decided by the municipality of that area. That is called municipal value. Municipal tax is a tax we need to pay on it. In some question, there is municipal tax will be given as percentage base, like 5% or 10%. So you need to always calculate that percentage on municipal value only. We will see in some question what we are going to solve. Okay, next is Miss N. Mary Lane Sobin. Do we need to give the section name for deduction and exemption as well? If you are able to learn them, you can of course provide those section or exemption names, so you will have get extra marks. But if you have only learned it properly well. Mamta Yadav, please make a chart in which all 7 cases are there. I have already made the chart for it. Do not worry. I'll upload that chart also for after the class. Just a second. This is a chart I've already prepared for all of you with all the cases, with all the short notes, all the clarification under house property, almost all the provisions in only 1 page. So I will upload that chart. Do not worry. You will be able to understand the whole package of house property on only in a single page. Just. Next is, sir, please say in Hindi. Sorry, Tushar, it's not possible. Okay, Parth is asking, in case F, if AR is higher than step number 2, Lower we have to get ARR. In actual for GAV, is it correct? Uh, you can say it, but ARR in case number F, there is annual rent. We have to taxable ARR only in that case if we have the higher value in that situation for those AR value. If the standard rent value is higher than our value, then we will not able to take it as an ARR. That value will be your GAV. Yes, you are correct. Ultimately, we'll get ARR if the lower value is higher in our question of case number F. Then ultimately, after deducting the vacancy period, we will get the ARR. But at the end, if you deduct the vacancy period before that comparison, so it might be get the lower value in comparison to standard rent. So we cannot do like that. We have to follow this procedure. Revision say Hindi, please. Not possible. Okay. Rahul Jain, correct. So the correct answer, I explained it to you. Addition books. This is study of institute is, I guess, enough for all of you. If you are able to solve the question study material, if you are able to solve the question of last examination, etc., and you're able to read all the provision study material, that is more than enough. You need not to refer any other book except the institute study material that is beautifully, wonderfully drafted. I must say that. Next is Rohan is asking, sir, income of property broker is under which head? It's a kind of a commission income. If there's a property broker, he's not having any rental income. He's getting commission on sale of those property. That is kind of a business income of commission. That would not fall under income from house property. Next, Lavanya asking, sir, I have a doubt on salary question, page number 5, 3.122. One more student was asking a salary illustration 25. Let me take the picture of this query, Lavanya. I will discuss this question in class for 21st of November. Okay. Okay, Mohammed is asking. Mohammed is not asking, he's answering. Okay. Samita is asking, what about in next tax regime? Does house property loss considered? That will be discussed in set off of loss chapter. Who is asking it? Smita. For now, we should understand only the provision of income from house property. So kindly focus on that provision. What will be the losses treatment under different regime? That will be discussed under the set off of losses chapter. Okay. Next is Manohar Yadav, Sarji, in 8th house as per case number C. The house used in PGBP and there is a loan on it. And can settle their interest on another house? I'm not getting your question, Manohar. In 8th house as per case number C, okay, the house used in PGBP, okay, and there is a loan on it. It can be settled their interest on another house? No. If the house has been used for the purpose of business, then any loan on that house and the interest on it can only be used as a deduction under PGBP head. You cannot use it into any other house, not allowed. Next is Rahul Sharma. If a resident assessee has a house in foreign country which has a different tax law, which tax law shall be applied for house property income? Okay, a very good question, I must say. If a house property is outside India, so if that assessee is a resident, an ordinary resident, then he has to pay tax on that property into India as per Indian tax provisions. Whatever house property division we are discussing, exactly as per these provision, he has to pay the tax on that property. It might be possible that he needs to pay the tax on that country also on the same income because he's earning that income in that country with the provision of that country tax provision. So in this situation, there will be a case where technically there will be double taxation on the same income. If he's a resident in India, he's earning 10 lakh rupees house property income. So he might be giving 10 lakh rupees tax on 10 lakh rupees as per Indian provision and tax on that 10 lakh rupees as per that country provision also. So it might be possible that the double taxation has been on that property for this scenario. there is a chapter under income tax that is called double taxation relief. In this kind of situation, our government has made a chapter that we would not take double taxation from our resident who is paying tax on same income in India and outside India. So there is a tax relief, there's a tax discount, there's a tax benefit in that case. So you will be able to read that chapter in international taxation when you will be in final. Fine. So in this level, in this current level, that kind of question would not be asked to you. Okay. Okay, now we are moving on to our questions one by one. So illustration number one. Before that illustration, okay, I will tell the answer of the question I have asked you right now. Then we'll move on to our illustration part. So the example I've asked you in our last class, the correct answers here, the A case, current year interest will be 1 lakh, that is 10% of 10 lakh rupees. The 1/5 of pre-construction period will come 60,000. How? The pre-construction period will be from 1st April 2020 till the 31st March before the completion of house, that will be 2023. So that means 3-year construction period, total 3-year interest will be 3 lakh. 1/5 of it will be 60,000. Case number B says if the loan has been repaid already in last financial year 22-23. So there is no loan in our current financial year 23-24. So current year interest will be nil in this scenario. The 1/5 of PPI interest will be 46667 in case number B. How? The pre-construction period for this will be from 1st April 2020 31st March 23. Or loan repayment date, whichever is earlier. So in this case, because loan has been repaid, so earlier date will be 1st August 2022. So from this date till this, that means 2 years and 4 months will be my pre-construction period. And the interest for 2 year and 4 months, if you will calculate at the rate of 10% on 10 lakh, that will come 2,33,333. 1/5 of it will be 46667. The C case, current year interest is 1 lakh and the pre-construction period interest will come again 60,000. Clear? So these are the answers for the example I have asked you in the last session. Now moving on to our question answer round in this. So Jayashree owns 5 houses in India, all of which are let out. Clear? All are which are let out. Compute the GAV of each house from the information given below. So all are let out. There is no unrealized rent, etc. So step 1, municipal value fair rent, whichever is higher is 90,000. Standard rent not given is question, so that will compare. That will be lower value also same. There is no extra comparison. So now we will compare this 90,000 with the ARR. ARR is 72,000. So whichever is higher is your GAV. In first example, it's 90,000. House number 2, 55, 60. Whichever is higher is 60. Now 60 and 75, whichever is lower. Lower is 60. Now 60 and 72, whichever is higher is 72,000. Third case, 65 or 65, same. So any value can be taken, 65,000. 65 or 58, whichever is lower. So 58 will be lower. 58 or 60, whichever is higher is 60,000. 24, 25, whichever is higher, 25. There is no standard rent, so 25 will be as a lower value. Now 25 and 30, whichever is higher will be 30,000. Your GAV. 80 and 75, 80,000. 80 and 78, 78. 78 and 72, 78,000 your GAV. So it's this simple. House property is very simple. Once you will go through the numerical part of this, you will solve the question in test your knowledge, etc. You will find it out. It's a very, very easy topic. Moving on to next illustration. You can see the solution, of course, over the solution. Illustration number 2. Page number 3.145. Okay, it says Rajesh, a British national, is a resident and accordingly resident in India during the previous year 23-24. He owns a house in London which he has let out for £10,000 per month. The municipal taxes paid to the municipal corporation of London is 8,000. During the previous year 23-24, the value of Indian rupees taken 95. So calculate the net annual value. No problem. No other value has been given. No other value like municipal value, etc. of that property. So we will take this 10,000 as the value for the purpose of GAV. 10,000 into 95 into 12. We will convert into Indian rupees. 10,000 into 95 into 12. That will be my GAV. Deduct the 8,000 into 95 into 12 as a municipal tax. Remaining will be your annual value. Simple. Solved. Clear? It's very simple. Next is illustration number 3 on page 3.148. It says Mr. Manas owned 2 house property, one at Bombay, where his family resides, and the other at Delhi, which is unoccupied. Okay. So he lives in Chandigarh for his employment purpose in a rented house. For acquisition of house property at Bombay, he has taken a loan of 30 lakh, 10% per annum on 1st April 2022. He has not repaid any loans so far. In respect of house property at Delhi, he has taken a loan of 5 lakh at 11% from 1st October 2022. So technically, these 2 house properties, what he has, both are self-occupied or vacant. So annual value of both has been nil. Suppose a cement year, if he exercise the option of shifting out, because the annual value is nil, so you can deduct the interest only if you are shifting opt out of 115 BAC 1A. So in this examples, we just need to calculate the interest value. You can see 30 lakh rupees loan, 10% interest value is 3 lakh rupees, restricted to up to 2 lakh rupees. That is 2 lakh rupees. The other property loan was 5 lakh, 11% interest, 55,000. That is for repair. And for the purpose of repair, you can claim only 30,000 maximum in any situation for repair, renovation, and renewal. So total interest eligible for both house properties separately is 30 and 2 lakh. That is 2 lakh 30,000. But in aggregate, you cannot claim more than 2 lakh. That's again a simple question. Next is page number 3.151. Anirudh has a property whose municipal valuation is 130. The fair rent is 110. So higher is 130. Standard rent is 120. So lower is 120. Now the property was let out for a rent of 11,000 per month throughout the previous year. And there's an unrealized rent of 11,000. So technically, this is a case number E. So if you will see, if we need to find the GAV in this case, then 130 and 110, whichever is higher, 130. Then 130 and 120, whichever is lower is 120. So this lower need to be compared to ARR, actual rent received. So 11,000, 1,32,000, 1 month unrealized rent. So that is 1,21,000. Higher will be 1,21,000 is your GAV. Now that GAV, the question says, municipal tax is 10% of municipal valuation. Even the question, only the percentage given that municipal tax is 10%. It is not written that it is on municipal valuation. You will always take it on municipal valuation. The municipal value was 130. So 10% is municipal taxes paid. That is 13,000 rupees. Interest has been given in question. You can see the GAV is 121. Municipal tax is 13,000. NAV is 1,08,000, 30% deduction and 40,000. There is no limit on this deduction because the property is let out. Only in case number A and B, there is a limit of 30,000 or 2 lakh. In all other cases, there is no limit of 30,000 or 2 lakh. Solved. Next is illustration number 5, which is for vacancy. This is we are going to solve. Illustration number 5, page number 3.153. Now, Ganesh has a property whose municipal valuation, let me solve it separately. Illustration 5 says that Ganesh has a property, municipal valuation is 2,50,000. The fair rent is 2 lakh rupees. Standard rent fixed by government is 2,10,000. Okay. Let out actual rent per month is 20,000. However, the tenant vacated the property on 31st January 2024. That means February and March, 2 month vacancy was there. However, unrealized rent was 20,000 is given in question. And question says, all conditions prescribed by rule number 4 are satisfied. That means all condition to treat your unrealized rent as a loss has been satisfied. Municipal tax, it says 8% of municipal value. Interest is given in question is 65,000. Clear? Now municipal value fair rent, whichever is higher, it will be 2,50,000. Then is 250 and 210, whichever is lower is 2,10,000. Now, because this is case number F, because vacancy is there. So now we will take annual rent in place of actual rent received, which will be 2,40,000 for the full year. There is unrealized rent of 20,000. We deduct it. We will remaining 2,20,000 with us. Now, whichever is higher is 220. Now 2 month vacancy can deduct, that will be 40,000 and my GAV will be 1,80,000. So if you will able to find the GAV, you will able to solve the question. So that is the solution. You can see GAV is 1,80,000. Others, municipal taxes paid by, you need to deduct, then 30% deduction, then interest has been given in this question. Next is illustration number 6 on page number 1.555. It says Pranav has one house property at Indranagar in Bangalore. She stay with her family in the house. Okay, the rent of similar property in neighborhood is 25,000 per month. The municipal valuation is 280 per annum. Municipal taxes paid is 8,000. The house construction began in April 2017 with a loan of 20 lakh taken from SBI Housing Finance at so and so interest. The construction was completed on 31st November 19. The accumulated interest up to 31st 19 is 360. On 31st March 24, Puran paid 240, which include 180 as interest. There was no principal remained prior to this date. Compute Puran income from house property. Now you can see that Purna, sorry, not Puran, it's Purna, has one house property in Indranagar. So the annual value will be nil because it is being used for personal residential purpose. Only interest calculation we need to do. In case of interest, the question says that 1,80,000. On 31st March 24, Purna paid 240, which include 180 as interest. So 180 as an interest we need to deduct. And we need to find out the PPI interest. The accumulated interest has been given in question 360. That is pre-construction period interest. 1/5 of 360, that will be 72,000. So PPI interest will be 72,000, 2 lakh rupees. So the answer will be 2 lakh rupees loss. Here's a solution. You can see that. Next is illustration number 7. Let me take those illustrations. Those are more important or some complications are there. Mr. Raj Lakshmi, illustration number 7 on page number 3.157. Raj Lakshmi owns a house property at Adyar in Chennai. The municipal value of the house has been given in question is 5 lakh. Fair rent the municipal value of the property is 5 lakh. Fair rent is 4 lakh 20,000. Standard rent has been given 4 lakh 80,000. The property was let out for 50,000 per month up to December 23. Thereafter, the tenant vacated the property and Srimati Rajalakshmi used the house for self-occupation. Okay, this is a good question. Rent for the months of November and December 23 could not be realized in spite of the owner's effort. All the conditions prescribed under rule number 4 are satisfied. So she paid municipal tax 12% during the year. So municipal tax will be calculated on municipal value automatically. She had paid interest of rupees 25,000 during the year for amount borrowed for repair for the house property. So first of all, can you tell me illustration 7 relates to which case? Kindly read this question and send me your answer. Just tell me which case illustration 7 relates. Is it case number D, E, F, or G? First of all, just tell me this answer. Then I will solve this question for you. Till then, let me take some query. Mr. Rahul Jain is asking, sir, in case of property transfer to minor child, rental income will get clubbed with legal guardian and tax will be paid by minor. How the tax will be calculated? Tax will be calculated as per the normal provision. Up to 2,50,000, it is nil, then 5%, etc. Or if he or she opted for, in case of minor child, you are asking, but that minor should be minor married daughter. Only this scenario will be work. The tax liability will be calculated as per the person, like the minor child. So it depends upon the minor child in which category he or she falls. In that case, the slab rate will be same as above, because we have 3 category of slab rate in the optional tax regime. Senior residents, those are senior citizen or super citizen and others. So the other category provision will be applicable if that person is fall in the taxability purpose under the optional tax regime. Clear? What is standard rent? Standard rent has been derived from a act that's called Rent Control Act 1860, I guess. From that Rent Control Act, a rental value has been prescribed for certain property that is called standard rent. Again, this is not going to be asked in question. Standard rent value will be given into the question. So in the case B, what if property is sold after repayment of whole loan? Whether deduction of PPI will continue if there is no house property? There cannot be deduction. Okay, it's not possible. Next is, because the loan has been paid before that date. That's why then the case number B, for the example I have given to you, Mrs. Suman Goyal, we have taken the value till the time when the loan has been repaid only. Case F, okay, the answer is Mr. Mohammed is saying case F, very good. Madhav Tiwari is saying case F, Kadambari Bhatt is saying case F, Sankaran is F, Monica G, F, case F, F, G, case F, case G, F, case G. You have to read the question properly. This is the problem we have. I have seen that almost 20-25 students give me the answer. Only one answer is correct. Only one. Even when you have the book, in front of yourself, you have the notes in front of yourself, still we are going to solve this question wrongly. You know why? Not because we do not know the provisions. We know the provisions. We have book in our hands. Because we did not understand the question. You have to understand the question properly. If you understand the question properly, that will be really easy to solve this question. Sorry, not only one answer is correct, almost all 50% answer is correct, whatever answer you have sent to me. You can see there is no vacancy involved. So those are sending me the answer as per case number F is wrong. There's only a word has been written, the property has been vacated. Understand? There's only one word has been written, the property has been vacated. And after reading this word, you might be thinking that it's a vacancy case. No. Vacancy means the property should be vacant, but says up to December, the property was used by tenant and thereafter, Srimati Rajalakshmi used the house. So where is the vacancy? Either there was tenant or there was owner. Either it was let out or either that was self-occupied. So that is not case number F, that is case number G. So it happens when we read the word vacant or vacancy, we think it's case number F. No, but you should understand the question as a whole. The property has been vacated by the tenant, tenant has been gone, but it is occupied by now the owner. So it is now self-occupied. There is no vacancy for even a single day. So it will be solved by case number G, and case number G is a simple case. It says municipal value 5 lakh, parent is 420, higher will be 5 lakh. Standard is 480, lower will be 480. So lower value is 480. Now it's a normal G case. That means we will take ARR. The 50,000 was the rent up to December. That means it is let out for 9 months. And November, December rent we could not realize. So technically ARR will be 3,50,000. So higher will be 4,80,000. That is your GAV. Understood? So please read the question carefully first before solving it. We do this. There is a process of solving any numerical. I personally believe there is a process of solving any numerical or problem, or we can say just simple process in your life also, personal life also. And the process says there are 3 steps in solving any problem, whether it's a question, whether it's your life problem. You have to listen it first carefully. Listen means understand. So you have to understand the problem initially. What is the problem? What does the question says? After understanding, you have apply your brain to process it, to remember the provision that whatever I have listened, whatever problem is there, what is the solution process can be applied in that scenario, what is the provision can be applied, what type of option I have to solve it. And then you start writing the answer, or you speak. You tell the answer or you write the answer. So there are 3 steps in a solution. That is first understand, that means listening, then processing, use your brain, and then speak or write. Generally what we do in hurry, we listen and we speak. We listen and we write the answer. We do not process it with the provision. If you will apply this theory in every question, read question properly, then recall the provision, whatever going to be applied in this situation, whatever provision, you should think about the provision. Okay, this question, this problem relates to my this kind of provision. After applying that provision in your brain, then only start writing or give the answer. That will minimize your those question answer going to be wrong, which you actually knows. In my opinion, in a CA examination, the problem is this. When we solve those questions wrong in our examination, which we know the answer, we have practiced those questions earlier, but in the examination, we solved it wrong. We are not able to solve that. Only those questions makes a difference in our fail or pass. There will be certain question in every paper. You might not be able to solve it, but the question, what you have practiced, what you know, if you're going to solve those questions wrongly, if you're going to answer those questions wrongly, that is going to be a problem for your examination. So please do those questions correctly. Give the answer of those questions correctly. You have already practiced. You have already learned them. Do not do this kind of silly mistake. What we just see, that we saw the word vacated and we start solving it with the vacancy. What we did in this, we just listen and speak. We just listen the question, we just read the question and start answering. You did not apply the brain process. So there is 3 steps in always in your life, personal, professional, everything. Listen, understand. Okay. Process, remind the provision. Recall the provision, and then speak or write the answer. I hope it will help you. Sorry. That was illustration number 7. We just solved it. It's simple. If you're able to find the GAV, all questions are simple in your examination. Now, I'm skipping the. Okay, now the question, which is very, very important, we are going to discuss, that is illustration number 8. This is very, very important question. And if I'm saying very, very important, that means it's difficult little bit, but it's important for the examination. Now, it is like case number C. It says Ganesh has 3 houses. You remember when we discuss case number C today, there were 4 self-occupied houses as I draw in this whiteboard. So the problem is this: in some situations, if you have self-occupied properties, suppose 3 self-occupied properties. Now we know out of these 3, 2 will be, annual value will be nil. That means 2 will be solved as per case number A or B, and 1 is going to be deemed let out. Now the question is, out of these 3, which 2 will be treated as nil value, or which one should be treated as deemed let out? How we will find it out? Suppose it's not 3, it's 5 properties. Now again that problem will arise. We know we can shift 2 out of these 5 for annual value nil, and balance 3 will be deemed let out. But which of these 3 will be treated as deemed let out, and which of these 5, 2 will be treated as a self-occupied? So that is a problem. For that, the illustration number 8 has been made. What the provision regarding it? There's no specific provision regarding it in the act, but we find a process to find out the best possible houses which we should treat to be self-occupied to minimize our tax liability. So the concept is very simple. There is no new provision. There is no new calculation. There is just a simple new process. It says, step 1, suppose all houses are self-occupied, and calculate their value accordingly. First, you treat all these houses are self-occupied under income from house property, and find out the value of all these houses. Suppose that they have been used for self-occupied purpose. So annual value of all houses 5 will be what? Nil. We need to deduct only the interest if there is any loan against it. So step 1 says, first of all, solve all the houses assuming them as self-occupied. Clear? Case B. Now कहता है solve all these houses as deemed let out. So once you need to solve all houses, suppose them as self-occupied, and then you need to solve all houses supposing them as deemed let out. Clear? So now we have the value for all these 5 houses as self-occupied and all these 5 houses as deemed let out. Now step 3 says you need to make now the combination. Combination, like if house 1 and 2 are self-occupied, then 3, 4, 5 will be deemed let out. So we need to take the value of 1 and 2 house as per self-occupied. What we have already find when we sort all houses value as self-occupied. So out of these 5 houses, house number 1 and 2 self-occupied value will be there, and house number 3, 4, 5 deemed let out value. What we have already find out from this step number B. We have to put it over here. So that will be the answer, case number 1. Now it will be total 5 cases. Now combination number 1 was this. Now combination number 2. Suppose now house number 1 and 3 self-occupied, their value, it's like permutation combination we have to do. And now if 1 and 3 and self-occupied, then we will take 2, 4 and 5 value as deemed let out. So we have a second value in this scenario. Now case number 3, I will take 1 and 4 value as self-occupied and all other as deemed let out and so on. So there will be technically 5 combination. We have 5 answers regarding this. And out of these all 5 values, whichever is the lowest value, that is going to be our answer. How it will be done practically, that is illustration number 8, which we are going to discuss after the break. Okay, so there is no query yet. So let's go for a break, and after the break, there will be a small story, and then we will solve our illustration number 8. So, Mr. Manish, can Okay, welcome back, students. I hope you all have your tea, coffee, water, etc., etc. So we were discussing the provision of income from house property, and we just discussed that if in the question we need to find out if there is more than two self-occupied or vacant property, and if we need to find out which should be treated as deemed let out and which should be treated as case number A or B with annual value nil. So there's a concept, there's a process. We have to consider once all property is self-occupied and once all property is deemed let out. Then we will make permutation combination and we'll find that case in which the lowest income or the highest loss is there. That will be our selected case. So we will discuss illustration number 8 for this. Before that, of course, we have a story time, a small story that is for you. पढ़ाने से ज्यादा डिफिकल्ट ना स्टोरी ढूंढने में टाइम लगता है मेरे को तुम लोगों के लिए। तुम लोगों को अच्छी स्टोरी सुनने को मिले, थोड़ा मोटिवेशन हो, ये सब तो टैक्स वैक्स आसान है। स्टोरी अच्छी ढूंढना बड़ा डिफिकल्ट है। इतनी शॉर्ट स्टोरी, उसमें मुझे बहुत मेहनत लग रही है। ओके, वो भी नई नई स्टोरीज लास्ट वाले सेशन में सुनाई थी, वो डिफरेंट थी। अब ये वाली थोड़ी डिफरेंट है। ओके, सो स्टोरीज वाज लाइक दैट। दो बर्ड थी और उनमें से एक थोड़ी आलसी थी और एक थोड़ी सी हार्ड वर्कर थी। तो वो इंसेक्ट खाती थी, इंसेक्ट्स, कीड़े। ओके, तो एक पर्सन था, उसका बिजनेस था, वो कीड़े पकड़ता था इंसेक्ट्स जंगल से और उसे मार्केट में जाकर बेचता था और उससे वापस से पंख खरीदता था, पंख, फेदर, विंग्स, ठीक है। उसको वो यूज करता था अपने काम के लिए। तो वो एक दिन जंगल से जा रहा था एक बॉक्स में, छोटे से बॉक्स में कीड़े लेकर। तो वो जो दो बर्ड्स थी वो दोनों वहीं बैठी थी। उन्होंने उसको पूछा कि कहाँ जा रहे हो, तो उसने कहा मेरे पास बहुत सारे कीड़े हैं और मैं इन्हें मार्केट में सेल करने जा रहा हूँ और उसके बदले मुझे फेदर चाहिए, विंग चाहिए। तो जो आलसी वाली बर्ड थी उसने कहा एक काम करो, मुझसे एक फेदर, मेरा एक विंग ले जाओ और मुझे कीड़े दे जाओ। तो इससे मुझे मेहनत नहीं करनी पड़ेगी, मैं फ्री में खाना खा लूंगी और मैं तुम्हें अपना एक पंख दे दूंगी, उससे क्या हो। तो उसने कहा ठीक है, ऐसा कर सकते हैं। दूसरी वाली ने कहा नहीं, मुझे नहीं चाहिए, मैं खुद से मेहनत करूंगी और अपना खाना ढूंढूंगी, इंसेक्ट्स ढूंढूंगी अपने लिए और अपनी फैमिली के लिए। तो उसने अपना एक पंख दिया, उस पर्सन ने उसे कीड़े दिए, वापस चला गया। नेक्स्ट डे फिर वही हुआ। उस बर्ड को लगा जो लेजी थी कि ये तो बहुत ही ईजी है, इससे मुझे मेहनत नहीं करनी पड़ती, खाना प्रॉपरली मिल जाता है। सेकंड डे फिर आया, उसने उसे फिर से बॉक्स दिया, उसने अपना एक और फेदर दिया, उसने अपने लिए और बच्चों के लिए खाना दे दिया। जो हार्ड वर्कर थी उसने खुद से ढूंढा, कीड़े लेकर आए, कम लेकर आए और फैमिली के लिए उसने इकट्ठा किया, बट उसने वो फ्री वाला काम नहीं किया। धीरे 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 होता क्या गया, जो बर्ड थी उसके सारे पंख खत्म होते गए, वो उड़ने लायक नहीं रही क्योंकि उसके अब पंख नहीं बचे थे। और धीरे 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 एक दिन ऐसा आया जब उसके सारे पंख खत्म हो गए। जब पंख सारे खत्म हो गए तो उस पर्सन ने उसे कीड़े देना बंद कर दिया और अब खाना नहीं मिलता बिकॉज अब तो उड़ भी नहीं सकती। तो वो और उसकी फैमिली के लिए अब फूड ढूंढना बहुत डिफिकल्ट हो गया और ऐसे करके वो बर्ड एक दिन मर गई। वो भी मर गई और उसके जो फैमिली में थे उनको कभी शिकार करना उसने सिखाया ही नहीं क्योंकि उसको फ्री में कीड़े मिलने शुरू हो गए थे। तो वो सब भी फिर धीरे धीरे कर कर मर गए। और जो हार्ड वर्कर थी उसकी लाइफ अच्छी हुई, उसने अपने सारे फैमिली मेंबर्स को, बच्चों को सिखाया कैसे हंट करते हैं, कैसे कीड़े पकड़ते हैं, तो उनकी लाइफ बेटर हो गई। मतलब यू हैव टू वर्क हार्ड फॉर योर फ्यूचर। अगर आप आलसी बन जाओगे, लेजी बन जाओगे, तो माइट बी कि लाइफ स्टार्टिंग में थोड़ी आसान लगेगी, बट बाय द एंड ऑफ दिस लाइफ धीरे धीरे करके आपकी लाइफ में डिफिकल्टी शुरू हो जाएगी। इट विल बी रियली डिफिकल्ट टू सर्वाइव इफ यू विल बी lazy, if you are not working for yourself. That's the worst thing in your life, that you have to make your future yourself. So जो लोग हार्ड वर्क करेंगे उनके लिए अभी मेहनत है लेकिन बाद में लाइफ बहुत अच्छी हो जाएगी। और जो ऐसा नहीं करेंगे वो अपनी लाइफ भी खराब करेंगे और अपनी फैमिली की लाइफ के लिए भी फ्यूचर में काफी स्ट्रगल छोड़ कर जाएंगे। सो दैट्स व्हाई आई ऑलवेज से कि मेहनत करो, सीए बनो, अपनी लाइफ अच्छी बनाओ और अपनी फैमिली को भी प्राउड फील कराओ। सो बी दैट काइंड ऑफ बर्ड जो फ्री में चीजें नहीं लेगी, जो मेहनत करेगी, सेक्रीफाइस करेगी, हिम्मत नहीं हारेगी और बाद में एक अच्छी लाइफ जिएगी। सो दीज 3-4 years, more like in a 3.5 year, अगर आप ठीक से पढ़ाई करते हो, यू विल बी अ चार्टर्ड अकाउंटेंट, एंड उसके बाद आपकी लाइफ बहुत अच्छी होगी। इधर अगर आप लोग घूमने में, लेजीनेस में, मस्ती करने में टाइम ज्यादा अपना वेस्ट करोगे, तो फ्यूचर विल बी वेरी 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 डिफिकल्ट। अंडरस्टूड? So that was the story for the today. Moving on to our question for the today. This is illustration number 8, which is about properties. Those are self-occupied and which is more than two properties. So we have to find it out of these three properties. Which out of these three properties should be treated as deemed let out, and which out of these three should be treated as self-occupied. Clear? So let's solve this question. What we need to do in this question, we have to take once all the properties treating as self-occupied and once all the property treating as deemed let out. So if I have the question, so illustration number 8, treating all as self-occupied ones. So we have three properties: house 1, house 2, and house 3. Clear? So if these are treated as self-occupied, the annual value will be automatically nil. Now only interest can be deducted. So interest has been given in question. In house number 2, the interest has been given 55,000 for repair. But for repair, we can only claim maximum 30,000. We are solving it as per opting out. That means we are solving this question firstly assuming that he is under optional tax regime. That means he is opting out from deferred tax regime. We have to solve the question in both ways as given in the question. So first is we are solving it as an optional tax regime. So loss from this property will be 30,000. And for the second property, house number 3, the interest is 5,000. So maximum up to 2 lakh we can claim for purchase or construction. So in this case, my loss will be 1,75,000. I hope it's clear till now. Now, suppose all these properties are deemed let out. If all these properties has been treated as deemed let out, then we have to find out the value as per deemed let out provision. House 1 GAV, 2 GAV, and third GAV. The GAV will be as under 350, 360. Sorry, the GAV will be house 1 GAV will be 3 lakh, 375 and 350. Yes, correct. It was 350. House second J will be 360. And house third J will be 3,75,000. There is municipal taxes paid, which will come 36,000, 28,800, and 19,800. Clear? After that, 30% deduction and interest. We have to solve more question also. So that's why I'm just writing down the value. You can see it from the solution from the study material. 99,360 and 105, 106, 560. Then interest is 55,000 full allowed, because in case of A only, it is up to 30,000. And in this case, 1,75,000. So we have the value house 1 as per deemed let out. House 1 value as per deemed let out. I can write it down over here. That will come 2,19,800. House 2 value 176,840. And house 3 is 73640. Now we will make the combination and permutation. So if it's case number 1, suppose house 1 and 2 is self-occupied. So their value will be as per house number 1 and 2 value. House 1 value is nil and house 2 value is negative 30,000. So house 3 will be considered as deemed let out. So what is the house 3 value is? This is 73640. So net value will be 43640. So if we consider house 1 and 2 as self-occupied and house 3 is deemed let out, then the net income from house property will be 43640. Clear? Suppose case number 2. House 1 and 3 is self-occupied. Then house 1 value is nil and house 3 value is 1,75,000 negative. So loss is 1,75,000 negative. Now house 2 value I need to take as deemed let out, which is 176,840. That will be 1,840. So if I'll assume house 1 and 3 as self-occupied and house 2 is deemed let out, then I need to pay tax as income from house property is only 1,840. Now the case 3. Case 3 says now take house 2 and 3 as self-occupied. So house 2 self-occupied value is negative 30,000. House 3 is 1,75,000. So now house 1 value will be taken as deemed let out, which is 2,19,800. So the aggregate of it will be 14,800. So in this case, you can see house 1 is deemed let out 30,000 and 1,75,000. That is exceeding 2 lakh rupees, but maximum we have income of 19,800 in this case. So in these three answers, the lowest income will be our answer. So in these three, the correct answer is this. So we will take case number 2. That means house 1 and 3 should be self-occupied and house 2 should be used as deemed let out. So there is no separate solution. Once you solve all the houses as self-occupied and once all the houses as deemed let out, then we have the value for all houses we need. And then we will make permutation combination of these houses. That will be your answer. If the assessee wants to opt out this optional tax regime, that will be the solution. But what if the answer, if he is in the normal tax regime, that means default tax regime. In case of default tax regime, the annual value of all these self-occupied houses will be 0 because under the default tax regime, you cannot claim the interest. So in that case, house 1, 2, 3 value will remain the 0 value. And after that, you can make the combination and the answer which has lowest income from house property, that will be your answer. You can check this solution from your study material. The solution, you can go through it and see if there's any confusion, if there's any issue. So under default tax regime or section 15 BAC, the house property, all self-occupied value will be nil. In this case, if 1 and 2 is taken as self-occupied and third is deemed let out, the value is 73640. The second option case, the value will be 176,840. And the third case, the highest value is 219,800. So in this case, under the default tax regime, the correct answer will be first phase, where we should take house property 1 and 2 as self-occupied and house number 3 as a deemed let out. That is under default tax regime. Under optional tax regime, we just solved that question. If is scenario 1, then there will be value is 43640. Then the second option, we have 1840. In the third case, we have 19,800. So the correct answer will be second option. That will be the correct value for the purpose of income from house property. Next is illustration number 9. A portion is let out and a portion is self-occupied. It's simple question. You can solve it yourself. In this question, there is a 1/3 part is technically let out, and the 2/3 part is self-occupied. So all the values will be divided into 1/3 and 2/3. Municipal value, municipal taxes, interest, etc. You can solve it. It's a simple question. The self-occupied part is going to be solved as per case number A. Annual value nil. Only interest will be deducted. And the let out will be solved as per case number D or E. Depends upon there is unrealized rent or not. Illustration number 10. Okay, this is regarding unrealized rent and arrear of rent. We yet to discuss this provision, so we are skipping this question. It's very simple, a single question. Moving on to our notes. There is some provision, some clarification has been left. After completing these provision, we will move on to our test your knowledge questions. First is recovery of unrealized rent. So what is unrealized rent? I've told you that's a kind of a bad debts. So if there is any unrealized rent, that is deducted from the calculation of ARR. That is not going to be considered as your rent income in the current year. But suppose there is a rental value of total is 2 lakh rupees, out of which 20,000 has been unrealized rent. So we will take ARR in the current year is 1,80,000. Clear? So this 20,000 rent has not been paid by the tenant in previous year. Suppose this 20,000 has been paid by tenant later, after some year. He wants to pay this 20,000 due. So that is kind of a recovery of bad debts. We called it recovery of unrealized rent. So a very simple provision says if there is any unrealized rent recovery in the previous year, then 70% of it is going to be taxable as income from house property. After calculation of normal house's value, 70% of that value. So why 70%? Because 30% will be deducted as standard deduction. So if 20,000 has been recovered as an unrealized rent, then after deducting 30%, that means 6,000. The remaining 14,000 will be your income from house property. So if you are solving your question, house property 1 income is supposed 50,000. House property 2 income suppose 40,000. So after solving all houses, now 40 and 50 is 90,000. In that 90,000, at the end, you will add recovery of unrealized rent, 14,000 rupees. So your income from house property will be 1,04,000 rupees. So you should not add this unrealized rent in any house property calculation. After all the calculation, you should add it at the end of the house property income. So that aggregate will be called, after including this, will be your unrealized rent. Next is arrear of rent. As we discuss arrear of salary, which says if there is any receipt of salary due to any retrospective effect, then that is going to be taxable in the year in which it is received. In the same way, if there is any increment of rent which we did not receive earlier, but due to some government order, any dispute in court, etc., our rent has been increased with retrospective effect, which is received in the current year, but belongs to any preceding year. That is going to be taxable as income from house property, same as recovery of unrealized rent. Whatever amount is recovered as arrear of rent, 70% of it is going to be taxable as income from house property. Clear? Now there are very important clarification. The first clarification is very, very important. Due to this first clarification, if you are solving 10 questions of income from house property, and if any income from house property GAV answer is not matching, then in my opinion, 90% is due to clarification number 1. It's a very simple clarification. And you might remember, today when we were discussing the provision, I have told you one thing, that if in the question there is municipal value, fair rent, and standard rent. If municipal value does not in the question, then you can skip it. You can solve the question without using the municipal value format. That means you can take higher of this, supposing it's or assuming it's a not applicable. This is your higher value. If standard rent is not given, then again skip that. It will be as a not applicable. This will be your lower value will be the same. But I did not say that if FR is not given, then do the same thing. No, I just told you at that time, if municipal value is not given or standard rent is not given. I did not say this kind of provision for fair rent. You can scroll back the video and you can check that even you didn't ask and either I didn't say about it, because FR has a different kind of provision. Now listen carefully. If in the question municipal value, fair rent, standard rent, if municipal value is not given, there is not a problem. But if in question fair rent is not given, but actual rent is given. Suppose in the municipal value is 2 lakh rupees. Question is silent about fair rent. The standard rent is suppose 1,90,000. So we cannot do this, that we can take higher of this. We can do this if there is no municipal value or standard rent. But if there is no fair rent, but actual rent has been given, 15,000 per month. If actual rent has been given, but fair rent has not been given, then we have to calculate the fair rent on the basis of actual rent. And that will be called expected rent. That fair rent will be replaced by a new value that is called ER. That ER concept will arise only when there is no FR, but actual rent has been given. If no actual rent has been given, then you can skip that process. But if actual rent has been given and fair rent not given, then in place of fair rent, we will find a value based on the actual rent. And how ER will be calculated? Actual rent into 12. That means annual rent will be called ER over here. That means there will be 1,80,000. This is a very important thing. Very, very important. Kindly read it carefully. Because if this is not here, you might solve the question wrongly. Suppose municipal value 2 lakh. Fair rent is not given. Standard rent is 190. And actual rent is given 20,000 rupees per month. So now if you skip that process, then you will take 2 lakh rupees as higher and you will compare it with 190. That is a wrong procedure. Your answer might be wrong. So now we need to calculate the ER on the basis of AR. That will be 2,40,000. So my higher value will be 2,40,000. Suppose this is not 190, this is 2,10,000. Or this is 2,50,000. Then we will take lower is 240 over here. So kindly, it's a request to all of you, please read clarification number 1 carefully. And the question is FR is not given. Then you have to find the ER in place of FR if actual rent is there. This is all about note number 1. It's very, very, very important. Please read it carefully. If in question AR is given, but FR is not given, then FR will be calculated on the basis of AR and that FR will be called as expected rate. If municipal value not given, not a problem, skip it. If SR is not given, not a problem, skip it. But if FR is not given, then kindly check into the question. If AR is given, then actual rent per month into 12, that means annual rent will be called a ER. And if on the basis of that ER, the step will need to be followed. If interest paid outside India without deducting TDS, if any payment made outside India generally, the TDS need to be deducted. So if TDS has not been deducted on interest paid outside India, then such interest cannot be allowed as deduction, whether in a self-occupied case or in a let-out case. So please remember this point also. These are very simple clarification, but that is very helpful in your questions. If loan taken for house 1 but used in house 2, then deduction of interest will be allowed from house number 2. Unrealized rent provision we discussed, deduction will be allowed when assessee proves that he took all steps to recover the rent from tenant as per rule number 4. In case of A or B, this is also has been discussed. If loan taken for repair, reconstruction, renovation, etc., deduction will remain 30,000 maximum. But if loan taken for construction, then 30,000 or 2 lakh provision apply. 6th is very important. You might have seen in the solution in the question we are discussing that if the value, municipal value standard rent and pay rent, they did not change according to months. If a property is let out for 8 months and 4 months self-occupied, still we take the municipal value for the whole year. We take the standard rent for whole year. We did not proportionate it. If property is 10 months let out and 2 months vacant, still we take municipal value, standard rent and fair rent and ER. Always take for the full year. Only ARR will change according to the month. Clear? But in some cases, or we can say only in one cases, these municipal values, standard rent, FR or ER need to be calculated proportionately also, only in one case. And which is the case? Case number 6 tell about it. If house property purchased or sold during the year, then municipal value SR, FR, ER will be taken for part of the year property owned by the assessor. So if the property is sold or purchased during the year, for example, I purchased a property on 1st of November 2023, 1st November 23, and let it out from 1st November 23. So I become the owner on November, then November, December, January, February, March, only 5 months. So if I let it out for 5 months, actual rent receipt will be for 5 months. Now the municipal value, if given in question for whole year, like 2 lakh, then I have to convert that municipal value SR, FR, ER also for 5 months. So that 2 lakh divided by 12 into 5 will be now my municipal value. Same in case of sale. If I sold any property, for suppose I have a owner of any property, I sold it in 1st of August. Then April, May, June, July, I am the owner of that property for 4 months. So in that case, municipal value, etc. also be taken for 4 months. For your help, there is a question, solved question has been framed by me. House purchased in January 2005 for 30 lakh and sold on 1st July 23. So in this previous year, it's not 203, it's 2023. So in this year, we are the owner of that property only for April, May and June, only for 3 months. Rent of property which has been sold was 5,000 per month. Property vacated by tenant on 30th June. So 3 months rent was there. Compute house property income if municipal value is 30,000. So now in this case, we have to convert this value into 3 months. So now municipal value will be 7,500. ER, because FR is not given, but actual rent is there. So I have to calculate the ER, which will be 5,000 into 3, 15,000. Higher will be 15,000. ARR is also 15,000. So GAV will be 15,000 less 30%, etc. So please remind this, if the property is bought or sold during the year, then municipal value, standard rent, fair rent and ER will be calculated for proportionate part of the year. That is again very, very important point. One point we have left in the clarification, which was regarding the co-owners case. And I have told you that we will discuss that case at the end of our house property. That was clarification number 4, this one. If a house property is owned by 2 or more persons, we call them joint owner or co-owners. Then such persons are known as co-owners. The very simple clarification is there. There is no separate calculation, no separate provision. It says generally in case of A or B, in case of A or B, we claim deduction maximum up to 30,000 or 2 lakh rupees. Maximum. We cannot claim more than this. Clear? But suppose if there is a house and there is joint holder, Mr. Ram and Shyam. And if interest is 5 lakh rupees, current year and PPI both, and they self-occupied the property, 50% occupied by Shyam for his residence and 50% by Ram. Now in this case, annual value, if we solve the question, we have to solve it separately. Ram and Shyam, annual value will be nil. And now we will talk about interest. So interest 2,50,000 can be claimed by Mr. Ram up to maximum 2 lakh. So the loss will be, and this 50% to 50 also can be claimed by Shyam maximum up to 2 lakh rupees. The provision says this limit of 30,000 and 2 lakh is not as per house. as per person wise. So if there are 3 persons, Ram, Sham and Raman, then this interest can be divided by 1 by 3 if they have equal share. Then we can claim it like 1, 6, 6, 6, 6, 7. All of 3, then these person can claim like 1, 6, 6, 6, 7. So if suppose the interest on loan is 10 lakh rupees and the property have 5 equal co-owner, then 2 lakh rupees can be claimed by that each co-owner separately, 2 lakh or 30,000 as the case may be. So that note number 4 is just saying that the limit of 30,000 or 2 lakh is not as per property wise but as per the person wise. So if there is joint holder or co-owners, in that case they can separately claim the reduction of 30,000 or 2 lakh as the case may be in case of self-occupied case. Other cases there is no restriction on interest, so there is no issue. The computation will be in normal manner, except that in the case of house property for self-occupied or vacant, the interest deduction can be claimed by all of them separately, 30,000 or 2 lakh as the case may be. Clear? Now the remaining 1 or 2 clarification is there. Then we will move on to solve our test our knowledge cases and the query session, of course. Okay, no notional income for house property held as stock in trade. It says if the provision we have discussed that if you have properties which is not occupied, so we can treat them as a deemed let out. But there is an exception. Suppose if there is Mr. A, he is a builder. So if he has properties and these properties are his stock in trade, so if these property does not sold, then they will also be treated as deemed let out, and this builder might be need to pay tax on this value, and this can be huge. Suppose a builder has 100 flats, he constructed 100 flats, and these 100 flats is not sold off yet. So these 100 flats can be treated as deemed let out properties, and the rent value of those 100 flats can be taxed in the hands of that builder without having any real income. So it can be a huge amount of tax he needs to pay. So government has made a special provision in case of properties if they are held as stock in trade. It says if there is a property which is completed construction, which has been completed constructed for a builder, then for 2 years from the end of the financial year in which it has been constructed completely, we will not treat them as deemed let out. For example, if these properties has been constructed on suppose 11th November 2023, then it says for this year, that means 23-24, we will not consider them as deemed let out, and 2 more years, 24, 25, 25, 26. So for these 3 years, technically, the year in which it is completed the construction, that year, it will not be deemed let out. You need not to pay any tax. And 2 more years from the end of that year, that will not be treated as deemed let out. Yes, from the year 27, 26, 27, if out of these property, those do not have sold off, will be treated as deemed let out. Clear? Provision of house property will be same if property in India or outside India. We have already discussed that provision. Point number 9 is regarding the set of provision of losses from house property. That will be discussed in set of chapter, of course. Interest deduction under section 24 can claim if you have actually not paid the interest, but it has already been due. So the interest, that is construction, pre-construction period interest and the current year interest under income from house property, you can claim the deduction even it has been due. It is not paid. So due basis deduction is allowed in case of pre-construction period interest and current year interest period. So we discussed the provisions for income from house property. Now we are moving on to the query session. Then we will take the test your knowledge question. And I'm telling you, house property is an easy topic. It's an easy topic. So the test your knowledge question, almost 5 questions are there. So I'll try to solve questions And if there is any issue, you can solve it yourself and ask me the provision. I'll let it and I will upload the MCQ sheet also after the class. You can solve question from that also. Let me see the queries, then we'll move on to our. Okay, so this is station format looks a bit complicated, but the answer will be the same. Yes, the format can be used as you want, but you have to follow the 3-step and should be shown in the process of your solution. Step 1, that is municipal value fair rent, then fair rent, standard rent and actual rent received or annual rent as the case may be. That will be as a part of your solution. Next is Mr. Rahul Jain is asking, sir, as per case C, if 7th property is used for own business purpose and business is paying rent, then will rent income will get taxable under income from house property and income will be calculated as per case number D. How it's possible you will give rent to yourself? Yeah, if it is a partnership case, then different scenario can be there, but the question is not clear, Mr. Rahul. You're asking as per case C, if 7 properties used for own business purpose and business is paying rent. Business is paying rent to whom? To yourself. That is not possible practically. But if there is a partnership firm and that is paying rent to the partner, that yes, in the case in the hands of partner, that will be income from house property. Clear? Next is deem let out mean place. Please say Hindi. Tushar is asking deem let मतलब assume कर लीजिए कि let out है. Actual मतलब let out नहीं. मेरे पास 4 घर है, भगवान करे ऐसा हो, है नहीं. मान लो मेरे पास 4 घर है मेरे खुद के नाम में. 2 घर सेल्फ ऑक्यूपाइड में हम उसकी वैल्यू नील कर सकते हैं. ठीक है. जो बाकी 2 घर हैं उन्हें गवर्नमेंट ये मान लेगी कि मान लो अगर ये किराए पर उठे होते, मान लो, जैसे मान लो कि आप पास हो जाओ तो क्या करोगे, वैसे मान लो कि ये घर अगर किराए पर उठे होते तो क्या रेंट आता या क्या वैल्यू निकलती. दैट्स कॉल्ड डीम्ड लेट आउट. डीम्ड मींस सपोज, एज्यूम, इमेजिन. क्लियर? नेक्स्ट इज राहुल शर्मा, सर कहां से लाते हो आप ये स्टोरी? बहुत डिफिकल्ट है, लेट मी टेल यू, बहुत डिफिकल्ट. इनकम टैक्स पढ़ाना, हाउस प्रॉपर्टी के दोनों सेशन होते हैं ना, या जो भी टॉपिक के सेशन होते हैं, मुझे कोई प्रॉब्लम नहीं होती. पर स्टोरी सोचने में ना मेरे को बहुत टाइम लगता है. सोचने में और ढूंढने में बहुत टाइम लगता है. बहुत मुश्किल से मिलती है. पहली तो वो बहुत शॉर्ट होनी चाहिए. दूसरी वो आपके सिलेबस या आपकी लाइफ से कनेक्टेड होनी चाहिए. तीसरी उससे आपको कुछ ना कुछ सीखने की जरूर मिलना चाहिए. तो ये बहुत डिफिकल्ट काम है, ऑफ कोर्स. नेक्स्ट इज Mamta Yadav is saying, Miss Mamta Yadav, sir, I have solved it as I choose first one as deemed property, both other as self-occupied, and answer is which match with book. No. Look, you have to follow the process. First of all, you have to treat all those houses once as a self-occupied and once as a deemed let out. In this question, it might happen that in the first case, you got the correct answer, but it would not be same in every cases. So please do not do this. Solve all cases as deemed let out ones, solve all cases as self-occupied ones. Clear? Then make the permutation combination, then you will find your correct answer. You have to follow the full process. You cannot do it in a short way. Next is ममता यादव, सर क्या सेल्फ ऑक्यूपाइड हाउस प्रॉपर्टी पर इंटरेस्ट की डिडक्शन नहीं ले सकते? ले सकते हैं, लेकिन अगर आप डिफॉल्ट टैक्स रिजिम में हैं 115 BAC, उसमें नहीं ले सकते. तो जो भी आप क्वेश्चन देख रही हैं जिसमें इंटरेस्ट डिडक्शन नहीं मिली है सेल्फ ऑक्यूपाइड में, वो सिर्फ वो क्वेश्चन है जो डिफॉल्ट टैक्स रिजिम में आता है. ऑप्शनल टैक्स रिजिम में हम ले सकते हैं. नेक्स्ट इज Achha, wow. Mr. Mohammed is asking, sir, have to compute default tax method or optional tax method? It will be given in question that by which method you need to solve the question. But if it is not given, then kindly make a note. That is default tax regime. You can solve it by that and kindly make a note about it. Okay. Or you can send this query to the institute via mail, etc. or the BOS. They will give you the solution that if the question is silent about it, then the which way should be opted. Next is Mrs. Nancy Saxena is saying, sir, if AR also not given, then Nancy, if AR is not given, then you cannot find the ER. Then standard rent and the municipal value, you have to solve the question by that method. And suppose if AR is not given, that means the property is not let out. Understand? And if it is not let out, that means it's self-occupied. If it's self-occupied, then annual value will be nil. We do not need any ER. But yes, if it's a deemed let out case in self-occupied, then if AR is not given, then you cannot calculate the ER. Skip that provision. You will solve the question with the municipal value and the standard rent if given in question. Next is, sir, interest for loan taken for houses 2 lakh or 30,000, two options क्यों हैं? I have discussed this thing in the last session, Mamta. If the loan taken before 1499, then the interest limit will be 30,000, because after it was an amendment in Act in 99 that we will increase the deduction. So before that loan, the interest deduction will be 30,000. And if the loan is taken from on or after 1499, but the construction has not been completed within 5 years from the end of the financial year loan taken, still it will remain 30,000. Do not ask क्यों है. You cannot ask the word क्यों है. क्या है हम वो समझ सकते हैं. Okay. Next is Miss Vaishali Bindal, sir, calculation 6 May, if middle of month date like 20, then days also calculated. Yes, it should be, but this kind of days question will not be given in examination. But if it is days, you should calculate it like that also. Next is, sir, what happened if the builders before 2 years, sir? Rahul, your question is not clear. Please ask in detail. You are just saying, and what happened if the builders before 2 years, sir? I don't know. What is the question? Property stock in trade means if building is your stock in trade, not an asset. So if you're a builder, then your building will be your stock in trade, not an asset. So in that situation, almost 3 years, you will be having a benefit that your property will not be treated as deemed let out. Clear? Next is Basa Ravajau, sir, what if pre-construction period interest is not utilized within 5 years of completion of construction? If you are not going to deduct that interest in 5 years, that will be lapse. You can, if you do not able to avail the benefit of 5 years construction period interest, then you cannot avail it later. Sir, Devraj is saying, sir, G, salary income deducted is easy, but property income tax deducted is difficult. I am really not understanding what question you are asking. Miss Soumya Jain, my question regarding second sir, what is this? Second sir से gratuity मिला और first employer government and other than तब भी exemption limit 25 देखेंगे दोनों को मिलाकर, या government का full exempt और limit सिर्फ other पर applicable होगा. सैलरी कहां से आ गया बीच में सौम्य, बट यस यू आर करेक्ट. इफ एक गवर्नमेंट एम्प्लॉयर से मिला हमें पैसा और एक अदर देन गवर्नमेंट से मिला, तो जो 25 लाख रुपीस की है वो सिर्फ अदर पे एप्लीकेबल होगी. गवर्नमेंट वाला सारा एग्जेम्प्ट है. देयर इज नो रिक्वायरमेंट फॉर एप्लीकेबिलिटी ऑफ एनी लिमिट. यू जस्ट ट्रीट इट 25 लाख रुपीस फॉर अ सिंगल एम्प्लॉय. सौम्य जैन, आई सॉल्व योर क्वेरी. नेक्स्ट इज हरिंद्र शर्मा इज सेइंग को ओनर समझ नहीं आया, प्लीज रिपीट सर. लुक, यू कैन स्क्रॉल बैक द वीडियो हरिंद्र एंड यू कैन लिसन इट केयरफुली अगेन ऑल्सो. बट चलो बता देता हूं. अगर एक प्रॉपर्टी के 2 या उससे ज्यादा ओनर हैं, ठीक है, जॉइंट ओनर भी कहते हैं उन्हें, तो दे कैन अवेल द बेनिफिट ऑफ इंटरेस्ट डिडक्शन सेपरेटली. जैसे मैंने एग्जांपल दिया कि एक प्रॉपर्टी है, 10 लाख रुपए का इंटरेस्ट है, अगर उसके 5 ओनर्स हैं अलग अलग, तो 2-2 लाख रुपए डिडक्शन सब क्लेम कर सकते हैं. सो डिडक्शन ऑफ इंटरेस्ट as per case A or B is not as per property but as per person. Rahul Sharma asking, sir, what happens when the builder dies before 2 years in case of step-and-trade houses? किस प्रकार के क्वेश्चन पूछते हो तुम लोग, क्या हो जाता है? राहुल शर्मा जी, क्यों ऐसे क्वेश्चन कर रहे हो? So if the builder dies, then somebody will be the successor of that business. If there will be some successor, then he will need to pay the tax on upon it after the 2 years of that property. These is kind of question are not related, of course. Okay, so moving on to the test your knowledge questions. Let's see how many we can solve within 10 minutes because we have short of time now. This is test your knowledge question. The first is saying Mr. Raman is a co-owner of a house property along with his brother holding equal share in the property. This is a question of a co-owner again. Municipal value of the property is 1,60,000. Fair rental value is 1,50,000. Standard rent under the Rent Control Act is 1,70,000. Rent received is 15,000 per month. The loan for the construction of this property is jointly taken, and the interest charged by the bank is 25,000, out of which 21,000 has been paid. I just told you that interest can be claimed on due basis. Interest on the unpaid interest is 450. Interest on unpaid interest is a kind of a penalty. You cannot deduct it as an interest. To repay this loan, Raman and his brother have taken a fresh loan, and interest charge on this loan is 5,000. Municipal tax of 5,100 have been paid by the tenant. You need to calculate the income in the hands of the Raman only. So for the purpose of Raman, it's a case of D case. So municipal value, because 50%, we can take the 50% value from here. Municipal value 80,000. Then fair rent is 75,000. Standard rent is 85,000. So you can see this is whichever is higher is 80,000, 80 and 85, whichever is lower is 80,000. And the property is let out for 15,000. That means 1,80,000. If we'll did half of it, that will be 90,000. So GAV will be 90,000. And the municipal tax is paid by the tenant. So we cannot deduct it, because we can deduct only if it has been paid by the owner. If municipal taxes have been paid by the tenant, we cannot take that value. Next is GAV 70. Why 70? Sorry. 80, 75. We have 80, 85. Then 80, then 90,000 GAV. Sorry. Municipal tax we cannot deduct. We will deduct the reduction of 30%, that is 27,000. And we will deduct the interest. For interest, we will deduct the 50% of this value and 50% of this value. 25 plus 5, that means 30,000, and the half of it, that is 15,000. So 48,000 will be our income from house property in the hands of Mr. Raman. I am telling you, house property is so simple topic that if you are able to find the correct GAV, there will be nothing more left to solve in this question. So that's what I'm trying to say earlier also. If house property numerical is in the examination, try to gain the full marks in it. If it's 5 marks, you should have scored 5 out of 5. If it is 8 marks, you should have scored 8 out of it. Because if it's a so simple question that if some student is getting 4 out of 8 in this kind of question, that's not a good thing. These are easy questions. So those are easy questions. That kind of question you have already solved in your practice, in your books, in your last examination practice question or mock test. That should not be gone wrong. You should try to score the maximum marks in these kind of questions. Now the illustration number, question number 2, which says Mr. X own one residential house in Mumbai. Okay. The house is having 2 identical units. We have 2 identical units. That means exactly the same unit. First unit is self-occupied and the other unit is self-occupied. Other is unit is rented for 8,000 per month. Rented is vacant for 2 months during the year. The particular the house for the previous year 23-24 are center. So there is self-occupied case and there is vacant case number F. Why do I remember you the cases? Because if you will remember that this is case number F, now you know how to calculate the GAP. So that will clear the question how or where we need to put the question. So the solution process will be in your mind that this is the way we need to solve the question. Self-occupied annual value, of course, nil. Clear? If the annual value is nil, then we just need to deduct the interest part of this value. Interest on money borrowed has been given. So we will deduct. Let me solve this question with the help of a solution. So it won't take much time. And we will have time to solve other. So this is question number 2 solution. Rented 50% valuation. Clear? rented value, in the hands of Mr. X. So we have total value of 1,90,000, 160 and 185. 50% is for self-occupied, 50% is for let out. So we have deducted the all value for the purpose of rented property. The GAV will be 80,000. You can calculate it. You will get the GAV 80,000 as per the case F. Okay. Then deduct the 50% of municipal value which has been paid on the municipal value, then 30%, and then interest on borrowed capital. The 50% part was self-occupied. Only interest can be deducted for that purpose. So our taxable value will be 34,675. Clear? Next is question number 3. Again, so self-occupied property, there is all questions now are simple. Kindly try to solve it. If there's any problem, I will solve it for you because we have short of time. We have to complete our provision within time. So kindly solve the question for income from house property yourself. That will be really helpful. So that will be really easy for you also to recall or remind the provision, learn the provision very easily. So if there is any query, kindly send me. Otherwise, we will close the session. So please do practice the questions for test your knowledge or the question we skipped in the illustration processes. I will upload MCQ test questions also sheet today with the answer. If there is any issue, any problem in any provision of the question, kindly let me know. We will solve in our next session. That is on 21st of November, I guess. That is PGBP. So that is going to be our next session. 21st November is my birthday also. So we will meet on our birthday and hope for the best for the India to win the World Cup on 19th of November. Let's see and let's hope they will win and we will celebrate it, of course. So there is no more query. So Manishji, can we close the session?